Hi, welcome to Forex in 4. I'm Mike Conlon for FX EDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, April 20th, 2010. Now, before we dive into these charts here, I know you're itching to see what this beautiful-looking trend chart is here, and I'll get to that in a second, but I will give you a hint. This is the U.S. dollar versus the loonie. Just want to talk quickly about some of the things going on in the market. The first bit of news we're talking about here is what's going on with Goldman Sachs. Yesterday, the SEC voted, quote, along party lines to actually formally charge Goldman Sachs with fraud. Now, I'm not certain why an independent regulatory agency such as the SEC actually has party lines, but what this tells you is that this may have been more of a political witch hunt intended to help financial reform laws get passed in Congress. So, it's unfortunate that stuff like this happens, but, time's going to tell what happens. I'm sure that Goldman is not without blame, but, this may be more political jockeying than anything financially that could hurt the market. So, time's going to tell what's going to happen then. That brings us into our second piece of news that Goldman Sachs had blowout earnings last quarter. I mean, surprise, their trading desks are the best in the business, and they're making a ton of money, and they're almost laughing at the SEC saying, come get us. Good luck, try it. So what we're talking about now is that the Forex market, as a result of the way that these themes go, is a trader's paradise. I mean, one day it looks like, it's doom and gloom, and the end of the world is coming, and the next day, it's pizza and ice cream for everyone. It's a nice sunny day out, and people are confident in the way the markets are going. So, if you know what you're doing in the Forex market, and, if you can kind of catch on to these risk themes, namely if it's a risk-on, risk-off sort of day, you can make a ton of money. There's trillions of dollars flowing through this market daily, and traders just like you are out there with their little nets out, just catching dollars away. So, the other news we want to talk about is CPI came in New Zealand last night. Came in a little bit less than expected. We'll take a look at that in a moment. The chart that we're looking at here of U.S. dollar loonie, that was as a result of the Canadian interest rate meeting that came out this morning. I'll discuss that in a second. And lastly, we're going to touch on briefly UK CPI, which came in higher than expected. So just looking here at the dollar loonie, as you can see right here at 8.55 was right before the announcement came in. Now they didn't change rates in Canada. Okay, it's remained at 0.25%, which is an all-time low. But it looks like they've signaled that they're going to go ahead with rate hikes in June rather than in July. The economic situation, as I've been trumpeting for I don't know how many weeks now, it looks very good in Canada, and it looks like a series of rate hikes may be coming down the pike. And as you can see here, just a fantastic move. Roughly, wow, how many pips is that? That's roughly, looks like 100 pips there almost. So that's a pretty good move for folks who trade this market. Just take a look at it. So things look good in Canada, not as rosy in New Zealand. We're just going to take a quick look here. I want to look at the Kiwi yen here for a reason. Let's just take a look at this on the 4-hour chart and see what this looks like. All right, so it looks like there's a little bit of support there at 65. Basically, in New Zealand, the CPI index came in a little bit lower than expected, which means that it may give the central bank reason to pause next time around come interest rates. Recovery in New Zealand has been a little bit more tepid than expected, and the Kiwis would be lower were it not for the general risk appetite that we're seeing in the market today. And one of the reasons we're seeing risk appetite as well is because Japanese yen is just weak across the board. One of the reasons that the yen is weak, in addition to normal carry trades, sell yen, buy higher yielding assets, is that the finance minister in Japan, he came out and he said that the Bank of Japan should shoot to have an inflation target of 1 to 2% or something like that. Well, I don't know what fantasy land this guy lives in, but yeah, of course that would be great if they could do that. Right now, Japan is experiencing deflation, okay, not inflation, let alone 1 or 2%. So, what he's trying to do is get the Bank of Japan to increase its quantitative easing and bond purchasing. Now, right now, Japan already has just a huge deficit as a percentage of GDP, and they can't lower interest rates any lower than they are. I mean, they're at 0.1% as it stands right now. So, monetary policy may not be the way for them to go. If they want to really encourage, inflation, they need to step up domestic demand. Okay, Japanese are known as savers. Okay, and one way that they could encourage saving is by putting a tax on just hanging on to your money. So instead of actually paying this minimal interest, why not tax people if they hold on to their cash? I know it sounds silly, but to increase domestic demand, they have to do something. If they just keep adding to the deficit, they're going to continue to spiral lower, as that's going to increase fears in the marketplace. So that's what's going on there today. Euro's fairly quiet, which is nice. German investor confidence was up, highest level in 6 months, which is good, despite what's going on with the volcano in Greece. And lastly, we're going to look at the pound here real quick. Now, CPI figures came in higher than expected in England, or in the UK rather, and what that does is that the Bank of England is charged with keeping their inflation targets within 1% of the target rate, and they're outside of this target right now, which means that they may need to do something about interest rates going down the road if the inflation continues on this trend. Okay, but tomorrow we're going to get the Bank of England policy minutes or meeting minutes showing that it's probably going to be a dovish stance there. They got the elections coming up on May 6th, so not sure if the Bank of England's going to move before then, but they may need to move soon. So that's what's going on in the market today. Today's clearly a risk-on sort of day. Risk appetite's happening, and that's the nice thing about the Forex market. Just to be very basic about it. You can go from risk on to risk off like in a heartbeat, and it's just fairly pretty easy to get onto that trend. So if you're someone who's thinking about getting into the market, highly encourage you to take a look. We have currency trading courses that'll help you understand these themes, and investors like you are cashing in every day, as this is a $1 trillion market. So that's what we've got today. So for all, happy trading on this Tuesday, and good luck. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.